I think it's very important to contextualize the craze around what Hong Kong's trying to do. I mean, Hong Kong is a natural place for a lot of companies to list, one of the key IPO centers of the world. And SPACs are really just providing another avenue to list. They're not meant to replace the IPO process, just something particularly in the growth stage area of the fintech space, new technology that allows many firms to look at an alternative avenue to really go to market. And the reality is you're also seeing, I think the next few years, you're going to see a lot of consolidation, particularly within areas like fintech and so on. This opportunity really paints a picture of being able to take that pathway to acquire a company and go to market here, as opposed to going through the traditional IPO route, which is very expensive, timely, and then the whole price setting process is entirely different altogether. So there are trade-offs, and I think the point around the post-de-SPACing returns, it's something we noted, we understand in our research, but the quality of companies and the thresholds that are required for companies that want to SPAC in Hong Kong seem to be higher than that of other comparable markets and jurisdictions offshore.
All right, so we've got alt capital raising method is what we're talking about for Hong Kong as well as for the Singapore market. What about the regulatory environment, the regulations? What about governance? Because you've got the Asian Corporate Governance Association saying that SPACs are not suitable for a place like where you are, Hong Kong, because of this whole history of manipulating shell companies.
Yeah, but I think the Hong Kong Stock Exchange is very cognizant of the fact that they want quality issuance coming to market. So, all SPAC promoters must be, they must meet the suitability and eligibility requirements of the HKX. At least one promoter has to be SFC licensed, type 6, type 9. You have a lot of safeguards in terms of not allowing for retail investors to go in the market. So it's really just limited to PIs that can buy SPAC shares. The time requirements as well to complete the SPAC. It's 2 years to do the announcement and then 3 years for completion, which is a slight extension on what you're seeing offshore, and then a 6-month extension being allowed. And then really that ring-fence escrow account where the initial SPAC proceeds raised, it's 100% of that basically to be held in that ring-fence escrow as opposed to 90% or a lower proportion offshore. So again, I think the reality is the stock exchange here does recognize some of the challenges that SPACs have faced, particularly in the US, some of the performance issues, some of the governance issues. So, what you're going to see is probably a lower volume of SPAC issuances come to market in Hong Kong, but a higher quality.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.